Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 10th of January. So welcome to a new year of trading, and we've got some big moves already in the first week, or the first proper trading week of the market. So we'll jump straight in and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see that we've got basically a continued sell-off from where we left off last year, just before Christmas. You can see we've got some very, very big, strong moves all the way down to a very, very important zone, which is around that 62-cent mark. We've had a couple of opportunities to go below it, and it's failed each time, but even as most recent as this last candle, it has actually made a new low. Well, basically, obviously not an all-time low, but a very, very recent all-time low. You can see I haven't been down here in a very, very long time. Not since the October big move of 2022. So it does certainly count for something that we're at a very, very strong point of support, but it's trying very, very hard to get down. Now, the moving average is still bearing down on it. What it does from here is going to be extraordinarily important, because it's going to be the catalyst for either another big move down all the way down to 60 cents or possibly into the 50s, or a reversal from here and starts getting back up to that 64, 65 level. Now, there's plenty of resistance around these levels here, and a good opportunity for it to go long, but it's got to do some very serious work here at the moment. You wouldn't be taking it on the information that we've got right now. But what we do know for sure is that there is a previous very strong support zone at this level, and it's a very strong round number at around that 62-cent mark. So all that on board, all we're waiting for here is a series of higher highs and higher lows, a momentum shift off this level. So we want to see price trading on the daily above the 20 moving average again, a series of higher highs and higher lows, and then we can start targeting that 64.50 and 65-cent mark from this zone. If we get a daily close below the 61.50, then we're in a little bit of trouble, I think, and we're going to start looking at shorting opportunities all the way down to the 60-cent mark. So whichever the daily plays is what we'll do, but the bias is probably more to the long, because we have got opportunities to go higher from a very strong base, but definitely one to keep an eye on. It is non-farm payroll in the next 24 hours as well, so we must be mindful that we're probably not going to see a great deal of action until that actually does get released as well. So just be mindful of that the markets might be a little bit quiet. All right, over to the US dollar CAD. It's gone from strength to strength. It's had a pretty lazy sort of period over the holiday period. We've had a couple of weeks here of not doing very much, and that can sometimes be construed as a bit of weakness, but realistically, all it's done is consolidated, and it's done that very, very well. It's given us a pretty good channel. If you go to a smaller time frame, you'll be able to see that you've had some pretty good trading in that zone, really. Like, you've got bouncing, effectively the markets have been bouncing up and down using all of our techniques, lower high and lower lows, higher high and higher lows. It's been really, really good in that regard. You can take it right out. You can see how well it's actually held up in that zone. Very, very strong peaks all the way from support and resistance in the bigger channel. So it's been fantastic to trade if you were just scalping it. But right about now, it's going to be, look, it found support on the 20 moving average, and it's looking at wanting to push a little bit higher again. If you want to scalp this and trade the momentum up to the previous high, around that 140.450 would be the target that I'd be looking for. I wouldn't be going any further than that just yet. It's always better to let it break through first, and then you come back and pick up the bickies after that, because I think it's generally a better trade. So anything short of that, I'm not really, I'm not comfortable on shorting this one. It's got too much strength at the moment. But if a daily candle closed below 142.80, that would be a bit of a different story, because then we'd have a lower high, lower low sequence and a potential big prevailing change of trend. So until that happens, we either get a higher high or a lower low candle. We're probably just going to play inside this zone that the CAD has given us. And then again, though, that's not likely to happen before non-farm payroll, so just be mindful. We're probably going to be just scooting around these edges here for the next little bit. All right, over to the US dollar yen. And look, it's ground its way up. It's similar to the CAD. It hasn't really done anything for 2 weeks, but it has held up a pretty good level of support and resistance in terms of a channel that you could have traded if you really, really wanted to over that period. It's pushing to a new high now. It's certainly trying to anyway. If we get a break up above this 158.50, which I think is the key level, a break above there, and I would be starting to target the 160 again. It's been a little while since it's been there, but it's certainly, you can see right through here these areas are going to be very, very heavy resistance for it, that 161.50 in particular. But there is a few problems at 160 as well. So you can see this big rejection candle over there, and we had nearly a week stop over here at that point around the 160. So that is more than likely the target, but we need to see it break to a new high. If it goes above this and makes a new high, then we're able to trade up to around that 160. If it rolls over here, I still wouldn't trade it until it actually broke below the 20. That would, you'd be trading against a very aggressive counter trend, so I'm very mindful of that. So I'd be looking for waiting and patiently waiting for the daily to break the 20 moving average on the way down before I start looking at shorting opportunities. So at this stage, until further evidence, we're looking at long opportunities on a smaller time frame to join in what is a pretty strong prevailing trend that is looking like it wants to break through to a new high or a new mini high. Dollar index has been the star of the show for quite some time now. We know we've had very, very big trading moves on the dollar index, and it is attempting again to push up to the new recent high. I think it's got 110 in its sights. As long as non-farm payrolls doesn't blow it out of the water, there's a pretty good chance that we're probably going to continue longer here. It's a resistance point, no question about that. Like, it's got a bit of work to do before it gets through there. It is going to, like I said, I'm not convinced it's going to do that in the next 24 hours. I think it needs the news to be out of the way, and probably next week we'll start grinding in one direction or another. I think the direction is potentially going to be long because we've got so much momentum on the way up. We've got a 20 moving average holding it up. We're above a support zone now, and all it needs to do is get a daily close above 109.50, and I think that the 110 is probably going to be nearly a formality if we get a bit of momentum kicked off that 109.50 level and a daily close above that high. So really just a bit of a watch and see. Look for small pullbacks, but of course the euro is the one we're going to trade in this instance anyway. It's hanging on for dear life at this level. It's at 102.50-ish support. That's very, very heavy long-term support. If you go to a weekly, you'll see that. It's a very, very important zone. It's been there for a while. You can see it was resistance there and it was support there. So that, you're talking about weeks of support. But if it does break through there, then the next real level is around the parity mark. So that's one thing we've got to be really, really mindful of, that as much as it looks like it's strong support right now, if it does break through, there's probably another 150 to 200 points on the way down before the next very strong support kicks in. So just be mindful of that. Dollar index is putting a lot of pressure on it, and the 20 moving average is obviously pushing it down. It's do or die here, really. That's all you can really say about it. If it turns around and starts to high, low sequence on a smaller time frame, then it gives you a good opportunity to trade it back up to that 104.50. But if we get a daily close below this 102.50, we could be in a bit of trouble, and I think we're going to start targeting that. Basically in the first instance, the 101, and then the parity 100 at that point. So really, really good trading potentially coming up on the euro. It's just a matter of waiting for the direction to kick in. So keep your trades relatively tight on it until a lot of this news is out of the way. And the S&P 500, it's kind of a little bit hanging on a string as well at the moment. Like, it's been weak over the last few days, and it is at a very strong roll reversal zone here, though, at the 58.80. We talked about this level last year for a long time, actually, and it held up very, very well. So it's still there, and all it needs to do is basically break past the if we get a break past the 58.50 with a daily close, then I'd be starting to target the 57.50 as the next move on the way down. But if it does reverse around here and finds a little bit of support, then we can start looking at pushing higher. But at this stage, if this gets below 58.50 or even 58 with a daily close, that's going to confirm a lightning bolt downward trend, which is a change of the prevailing trend that's been going up for quite some time. And it's also going to consolidate a 20 and 50 moving average cross, which hasn't happened since price was all the way back down here at 5,500. So very important zone for it, and it is a little bit of a dear life moment, because if it does fail here, 100 points down would happen fairly quickly. I think we've got probably a fair bit of momentum built up to push down to the 57.50 and as an extension 56.50 at these two roll reversal zones. So certainly one to watch, but again, more than likely going to be quiet over the next 24. So just be mindful of that. Okay, so thank you very much for joining me today. We're very glad to be back bringing you these videos every Friday. Hopefully you had a great break and have done a little bit of trading this week. We've seen a little bit of volatility, and we'll see what we can get next week after the non-farm payrolls result is out. Thanks very much, everyone.